Your mic needs to come down a bit too, mate.
Better?
There you go. Yep.
Yeah, sorry. I had it hoiked above my ear because I've already had visits. Okay. Right. Got to get straight down to business, guys. I have taken a short in the FTSE, so we need to get straight in. The price. You will be looking for a bounce, and I wouldn't necessarily rush in here. If you are going to rush in here, then you want to take only, what would probably be a quarter of your position at this point, and I'll show you why. Now, I've taken a short in the FTSE. You want to try and get in around about the daily pivot here, and there is a little trend line along here, so it's still likely to pop down there and bounce back up again. Now, whether it comes back up to the daily pivot up to this point, beyond, not quite as far, that's yet to be seen. So while we're moving to the downside, I wouldn't hop in just yet. Let the market develop. Now, if it is going to come down and you feel like you're going to miss it, then just let it come down and close below, and then bounce back. You're going to get fairly close to the same price. It's 20 pips, and considering the kind of environment we have with the ATR, then 20 pips isn't that much. So don't worry too much about getting in too early, because, as I say, it might go to the daily pivot and go beyond. We're not quite sure. There is obviously the price that I want higher than this, and I'm effectively scaling in at this point. I didn't want to scale in quite as early as this, but that's really the opportunity that's presented itself. So that's why I'm starting straight away to take some shorts in this market. And if we good morning, SF. Good morning, John. Good morning, Kumar. So we have oh, John, you have to tell us all about that, buddy. And the other thing, John, is if you've got original music and you own the licensing, maybe we could play something on the show. What do you reckon, Jeff?
Yeah, absolutely.
Yeah. So if you've got yeah, we have any recordings you've got. As long as there's no swear words in it, then we'd be quite happy to give you some exposure on here.
Nah, and you can give a little bit.
Give a little bit. Well, a little bit of swearing. Actually, you know what? There's a guy I listen to on YouTube, and all he does is have expletive, so it's obviously allowed. But yeah, if you got any original stuff, John, then let us know. I know not everybody plays original music, and there's probably more money in not playing original music right now anyway. So I kind of get that. Oh, mate, even better. All instrumental. That'd be amazing. As long as you own the licensing on it and we haven't got any hoops to jump through, and you give us the go ahead, then in instrumental music would be even better. Maybe we could play it as a bit of an intro, Jeff.
Little sting for winners and a little bang bang for losers. Yeah.
Yeah. Yeah, that'd be amazing. You could maybe start becoming our John Williams of the show.
Musical director, yeah. Absolutely.
The musical director of the show. Anybody doesn't know who John Williams is, he wrote the Star Wars stuff and Jaws and loads of good stuff.
Oh, no, hang on, that's not quite.
I don't know what that is. Anyway, we are... You're going to get fined for that, Jeff. Someone owns that.
Yeah, I know.
We are short the FTSE. So wait for the daily pivot, which is around about 80 to 100 pips above where we are now. Or this double top, which has created something of an M topping pattern. So this is the neckline of the M topping pattern. Have we got the right
chart for you, mate? I've got an LSE3 market close.
Oh, sorry. No, we're not on the right chart. Sorry, guys. Okay. Oh, well done. That was my fault. We should be on numero uno. This one. This is what we should be looking at. So market's just opened up. We could push down to this level. As I say, I am short in the FTSE. I'm starting to build in a position to take longer term positions in a short, because I have a short bias. So if it fails here, I'm not too concerned. We are popping up, we're popping down, we're popping up. We talked about this M topping pattern. Here's the neckline. The neckline doesn't have to be straight. At this stage, the neckline is slanted. So if this is to come through this level, then you would look for it to return to take it along the neckline for a short, and that's where I can get in a little bit heavier. Prices might be a bit too close for me to do that, but if you want to get into this at the current pullback area, then what you are looking to do is, rather than that, you will be looking for a pullback to the daily pivot to take the short, and if it goes through, then you add more here after making the first trade safe by having a stop at break even. Or alternatively, there's a few scenarios that can happen here, obviously, as there always is. Alternatively, it pops all the way back up to the highs and you take the short here. And if it comes down and goes through, then you well and truly in the money, because that stop will be at break even. And when it comes in, you can add full at that point as it kind of comes to test probably this level here now. That looks like a decent horizontal level. Sorry about the lines, but it looks like the pattern will slightly change if that was to happen. So we take that there. Now the final way that that I'm entering the short, that I'll control it, is I will wait for the market to burst through this level. And you can ascertain how much I'm risking with this one, because I can afford for it to go all the way through and up to this point here and add to it to come down. And then, the pattern really will start looking different. It might even then start looking like a left shoulder ahead, and possibly it comes up one more time to form a right shoulder here. Few different connotations, but I'm adding shorts basically as we go now. And the loading comes as it comes my way. So I'm light here, I'll go light here. If it comes down and starts trending in my direction, then I start to load in, I start to stack in. So that's the plan with that one, mate. And I will pass over to you because we need to get to the pound trade.
Indeed we do. Oh my goodness.
Fad, yeah, I'll get to that in a moment, Fad, about the huge stop loss. Yes, it is, mate, but it's all relative. So we'll talk about that in a moment. So let me pass to Jeff for a second. Okay, yeah, go for that, and I'll get to what you're talking about as well, Helen, in a moment.
All right. Okay, guys, those of you who are joining us for the first time, welcome once again. And those of you who aren't yet up to speed with this breakout trade that we trade each and every day on pound US dollar at the open of London session, here's how it works. We go to the open the 1 hour chart, and we take the range of the last 3 bars prior to London open. Now, as is often the case, we get a little bit of an indicator as to what might happen next with the previous bar, and they were preempting a buying session here, certainly on the pound, as we got close to London open. At this point in time, they're wrong, but that doesn't mean anything. We can see this explode very shortly. So we place a long order above the high of the range of the last 3 bars. Now, the range of the last 3 bars is clear today. Again, it is the last candle. Yesterday, I think it was either the first candle or the last candle, can't remember. But anyway, today it is definitely this candle, because these are both inside bars in reverse, if you like. So they're both in, well, I think they are. Let me check the low of that one. 118.183 and 118.187. Sorry, I'll have to go with that one. 118.183. So I've already placed the long order, and I now need to place the short order. So it's 118.183 is where we're going. Sorry, short. Yes, I've placed the long already. So 118.183 is the low. So what we do is take 10 pips off that. So I'll round it down to 1818, and then I'll take 10 pips off. So that will become 1808. Will be our entry for the short, which is also the stop loss for the long. So we'll get in here and we will put our stop loss here for the long, which I'll just go through in just a tick. But the stop loss for the long is exactly the stop loss for the short. So the stop loss I'm putting on this trade will be at 1.1952, which is 15 pips above the high of the range. Okay, so the high of the range is 1.19367. I'll round it up to 1.1937 and add 15 pips. And that is the entry for the long and the stop loss for the short. Why is it telling me that? 119.52. That's perfectly okay. Stop loss, 1.1952. Doesn't like it. Why is it so? Buy stop. Because it's a sell stop, that's why. Got it. Nailed it. There we go.
You know what you're doing, mate?
Do I know what I've now got? No idea what I'm doing. Absolutely no idea. So we've got our entry here, which is not far away, actually, at 1.1952 for the long, and the stop loss for the long is the same as the entry for the short, which is at 1.1808. Okay, and very close to an entry on that long order by the looks of things. Now, yesterday, this actually does look bullish based on what I'm seeing here, but no way for me to trade this here on a on my strategy, which is don't trade at the highs, long that is. I know this is an extremely bullish bar. This is a nice rejection of the former trend line, which is now no longer valid, of course, but we've also seen a rejection of the daily pivot. So this may well go. If it does, it does. That's fine. We'll be in that trade. I'm not that confident of it, I've got to say, because I don't like trading long at resistance. That is just a given for me. Let me put in a decent trend line here, or trade line. We'll probably swing it up to there and bring it across to here. And there's another form of resistance that we've got to get through. Okay, so we're in the order. We're in the trade by the look of it. And now, stop doing that, you goose. There, that's what I wanted to do. So now that we're in it, we need to cancel the short order, right? So the short order is cancel. No, that's the buy. I don't know why I've got to go up here for the short. I can't find the short. All right, then we can do it another way. So cancel the short and then go to a 15-minute chart. And what we do now that we're in the trade is we trail on a 15-minute chart. Now, what we need to do is wait for two 15-minute bars that are buy bars. So if, for instance, we get a buy bar after this one, because this is the entry bar, we don't count that one. What we do is we wait for one here and another one here. And if that's the case, we move our stop loss underneath there. But if there is a seller bar in between two bars, then we can't do anything. We've got to wait for another two buying bars. And if we get the two buying bars, we move our stop loss underneath those. If that continues to be the case, we just trail it up. So that becomes the two bars, and we put our stop loss underneath the second, or sorry, in this case, it'd be the first of the two buying bars. If that's not clear, let me know, but that's exactly how we trade this at the moment. I must stress that it definitely is in beta test mode. We are not saying this is a proven strategy at this point in time. So please, if you are following this trade, act accordingly. It is not a proven strategy at this point in time. Righto. So that's the pound US dollar breakout trade. I've got another order that I want to show you guys, and I'll do that now. And then we'll go back to Ash.
Yep, we got FTSE's at the price now. So yeah, we'll come back to me in a minute.
Okay, let me get rid of this pen, which doesn't seem to want to disappear. There we go. Now we've got a choice here, guys. We could trade the Aussie, or we could trade the Kiwi, or we could trade them both. It will essentially be the same trade against the US dollar. Now, what I'm considering here is that we've broken a trend line. We've come back beneath it and we have retested it. We've also retested the daily pivot here, which I like. So what I'm saying is if price were to come back in this direction, unlike it's doing at the moment, I would place, well, I have already, as you can see, I've got an order in the market and it's underneath this candle here. And the stop loss is above this swing. So if you want to follow that one, I've got my entry at 0.5772 and I've got my stop loss at 0.5885. Okay, and I'm looking for short here on the Kiwi. You could, if you chose, split your risk and trade the Aussie. It would be exactly the same trade, in my humble opinion, because they're both against the US dollar. They're both commodity currencies, and I expect they'll both react at the same time if they do react. Okay, so looking at this one's a little better actually, because we've actually broken the high of the triangle that you can see there, my nice little market structure that I've got, come back underneath that, and we've retested now, certainly retested the top of that range. Looks like we're going to have a test of the daily pivot, which is absolutely plumb. That's exactly what we like to happen. Thing I don't like about both of these trades, which is why I'm trading them at reasonably small risk, is that they are sitting on a very strong support level. So I've got the entry just below there. If it does bounce again off here, then hopefully we won't get taken into a bad trade. But I do like the fact that we've broken down the structure as well in this ascending triangle, and we've retested that as well. So I do believe that if price wants to come back in this direction, should take us in. I'll go through take profit levels a little bit later, because I know Ash wants to take you back to the FTSE at the moment.
Yes, let's have a look at the FTSE again. We just opened up, and we are currently testing the level. So everybody knows about the everybody knows about your bars that you learned on the IFP weekend. So what we've got here is a FTSE 100, which is this is the pattern we're looking at. We're looking at this M topping pattern, and you know we haven't touched the trend line as yet, or have we? Looks like it might be there. So the trend line is quite tight right now. This is on an hourly chart, so you guys should be able to see that on your hourly chart. So the bounce was fairly inevitable from that particular point, and now we've tested this high. Now we're not going to enter this on an hourly chart. We're going to come down some levels and have a look. So the 15 currently is also showing some bullish bias as the bars forming here. But if we look at this on a 5, then we get a 5-minute chart, which is actually hasn't even touched that daily pivot, but it may not if that's the level we're looking at. So if this is the bar, this ends up being the bar, it's going to get probably a bit close to this low. I wouldn't want to. There's no point in entering on a bar like this with a target which is so low, because it could again bounce off that level, and then we could be in all sorts of trouble. So what we'd be doing is just waiting for this to develop, possibly touching the daily pivot, and just giving us something a bit smaller to enter on. Even for a 5-minute bar to have a range of 29 pips is pretty big. So that's really no good for us, to put in a stop at the low. It's going to be no good. Now I've entered this already, but my strategy, my entry, the way I enter trades is going to be slightly different to the way that you guys enter trades. So I wouldn't advise just doing that just yet. So we're waiting on this one, and we might be waiting on the 15-minute chart, which is going to be much better. To get a 15-minute chart signal would be much better. So let's encourage that instead of going down too low. So we need to touch this daily pivot. The next bar maybe touch the daily pivot and maybe give us something of a reversal. Then we can enter at the low of it with stops at the highest point. Now that seems pretty counterproductive, because somebody said it's a big stop loss. Yes, it is. But what you are trying to do is scale in very, very gently. And if the trade goes your way, then you start to load in. So that would provide, something of a 200 pip stop loss. But as I said, it's all relative, because the movements that we've got in the market right now are, swings of around about 200 pips. So it could travel 200 pips to the downside, then you could be at break even in the same session. So you've got to make sure that your account can cover it. Now there's 0.2 lots. I think you guys have probably sorted that out now. Yeah, I think you've got that sorted out. Okay, what's Helen saying about? Yeah, well, this is the thing. You're absolutely right, Helen, and I'm looking at this stuff as well. Who's going to make the drug? But I have to say, my preference when I look at any stocks, my preference is just to see who's kind of was getting a bit beaten up even before that happened, or see who was doing okay before it had happened. There's a company over here called what they called? I think they're called MEN Medical, and they are making some of the respiratory systems, and also Dyson. The government has done a deal with Dyson to do some respiratory systems as well. But if you look at Dyson and look at the fundamentals on Dyson, look at the balance sheet, and vague things on the balance sheet. If you're just looking at turnover, profits, were they growing? Were they fairly solid before this happened? Because if they were, then you're buying into a good company anyway. If you go and buy a company just because it makes the just because it might make the respiratory systems, then it may well still be subject to some pretty wild swings. It may not, but it might not be quite as secure. So be careful when you find out the company's name. And the best thing to do is I use ShareScope to analyze my stocks, John. You do have to pay a paid subscription, but I think they're an amazing company, and it's a brilliant site. So let's wait for a little while. Let's see if we can get a 15-minute bar that is fairly gentle. If it's small like this and it looks like price isn't going any higher, then we've got an entry. If we don't have that, then we don't have an entry, and we're just going to have to sit tight and wait for it. But stops up here, as I say, because the market seems fairly buoyant right now, and I don't know why. Well, I do know why. It's because of the stimulus package, but the numbers aren't going to be good. There's no doubt about it. We get continued releases on these numbers, and they continue to be poor. So I've got no confidence in this whatsoever. So still looking for the short in the FTSE. As I say, I've taken my short already, and I'll be adding to this position. Whether it goes down or whether it goes up, I'm going to hold on to this, and I've got quite a lot. I've done my due diligence on this, and I've got quite a lot of room to absorb a move to the upside. If it does start to break forward. Dyson, I will post that in for you.
They're the suck and blow people.
They are. So they make Hoovers, which is why I quite like them. Because they.
Yeah, we've got Dysons.
You got Dysons?
Mm-hmm.
There you go. You see, even Jeff's got one. If Jeff's got one, you want to be going out and buying it.
Must be good.
Because Jeff's got a dog.
Yeah, absolutely. And it did test the Dyson. Both of them. I've got two Dysons. One's a stick and one's a big barrel thing. And test them both out. It fills them up very quick. That dog.
There you go. You see. So Jeff is a huge advocate of Dyson. And
true story.
Yeah. And there's good reason for it. When you got a dog, you need a good Hoover, don't you, Jeff?
You certainly do. especially my dog. He's a big dog, and
he's a big dog. Yeah. Nuts. So there you go. So Dyson I like, and the fundamentals in Dyson are probably pretty good. When it comes down to Hoovers, I mean, I don't know whether they've cornered the market, but they've got to be pretty close, haven't they, Jeff? I mean, they've got to be one of the outperformers in the Hoover industry.
Dyson.
Yeah.
Yeah, absolutely. There's another. I used to have one as well, and I gave it to my uncle. No, not Henry. It'll come to me. But I think we $2,500 or something. Very expensive.
That is
But
expensive, yeah.
do they suck, man? They're unbelievable.
There you go.
I
So
gave it to my uncle, who was he's dead now. Maybe it killed him. I'm not sure. He complained because it was sucking the carpet off his floor.
oh, really?
Yeah, it was unbelievable. They're
Wow.
really good machines. I just
Wow.
can't remember the name of them. Amazing things, but yeah, gee whiz, did they cost some money? Whew.
So we got so check out Dyson's numbers. You know, that's the important thing here. What numbers do Dyson have, generally speaking? Have they got decent profits? Because something similar happened with Apple a few years ago. If you look at Apple now, I wonder if I can clean up this chart any. You got anything you got to deal with right now, Jeff?
I can if you need me to.
Okay, no, not just yet. I was just gonna show the guys the argument with Apple.
Sure. No, I've got nothing urgent. No.
Okay, brilliant. So let's see if we can bring up a stock of Apple. Now, if we look at Apple on actually, I don't think we can look at Apple. I don't think we can look at Apple as it goes. Sorry. Oh, we might be able to. Hold on a second. Oh no, maybe not. Maybe not. No, only because the historic data that I'm going to have to look at is further back than I have information on. I can show you the chart, but I can't show you the reasons. The Apple really, I think back in 2014 was an interesting play because everybody was talking it up. So I might have to describe it instead. Everybody was talking it up, you know, as this $1 trillion company. And I think it's probably got there by now, but by the time you know it was being like at the time it was being talked up, Samsung were becoming sort of quite a big player, so really it started to diminish some of the profit line. And the reason I can't show you that is because I don't think my financial data goes back that far. But it's really important to be looking at the financial data when you are making an assumption on any company. Even though you have a potential event that could drive their stocks up, you want a nice solid company. I could probably show you instead. Maybe we're getting into a region which is for another time. But you know, analyzing balance sheets and stuff, it might be a course for another time. If anybody's even interested in that stuff, I don't know. I know you guys really have kind of come to learn about forex trading, so maybe it's not such a good idea. I could lose people by starting talking about balance sheets and stuff. So let's not go down that particular route. But because Helen's mentioned looking at a specific stock, for you specifically, Helen, then the balance sheet is going to be something well worth getting your head into. And learning it just a little bit. You don't have to learn a lot about it, and you don't have to look at things in detail when you become a really good technician, because you know, Jeff manages to make his living off and all his profits off the back of pretty much, I mean, I'm not going to say 100%, but there's got to be 80% technical reading of of reading, right, Jeff? I mean, would you say that?
At least 80%, yeah, probably more.
So 80% and above of pure technical. So if you can add a little bit of fundamental knowledge, but still use your technical triggers and technical setups to get you in, then you don't need to know everything that there is about a company, because effectively you're still trading the technicals. But what you're trying to do is give yourself a little edge. So yeah, so there's a few things. Now, if you've got a pen, I would suggest that you go and look at PE ratio. And the PE ratio is the price to earnings ratio. And I could really go off on a tangent right now, but I'll try not to. So PE ratio is your price to earnings. You know, if the earnings are growing, then is the price also growing? Because if it's not, it probably becomes a stock of value. If the earnings are diminishing, is the price also diminishing? Because it becomes a stock of that's overvalued. That's just a simple way of putting that metric. So PE ratio, write that down, go and study that. EPS, which is your earnings per share, go find out about that. The PEG ratio, which is if it's below 1, really that's almost like the profit and the earnings together. If it's below 1, it suggests it's undervalued. If it's above 1, it suggests it's overvalued. So those 3 things are really important to have a look into to start with. And then you go into things like turnover and gross profit. Yes, you got it, Helen. Yeah, PE ratio, EPS, and PEG. Go and have a look at those 3. Go and have a look at those 3 ratios and see if you can understand them. Because if you look at a chart and you have a setup and you like those numbers as well, that's going to give you an edge. And obviously you can go, I can, if you can go as far as you like into the detail of a stock. So, I won't go into the details of them, but let me show you what we've got here. So if we look at this screen down here. So if I look at my financials here, I'm not sure if you can read that very well, but if I go into my financials down here, then we can look at the company, just what they do, really important to kind of start with, and then we look at the income sheet. So here we have turnover and operating profits, the earnings before tax, all these kind of metrics we want to start getting kind of used to, and then you get your balance sheet. Which shows you about the borrowing, what assets they have, what debts they have. Can their assets cover the debt is a really important thing for me. The cash, which is showing you what kind of expenditure that they've got, and the ratios, which is the PEs and all that kind of thing. So dividends per share, not really interested if you're trading it. So you can almost kind of forget that kind of thing. But you do want to know your profit ratio. So you can really kind of like sift through. So the dividends tab, it's very, very rare that you're going to really, or I'm going to look at that, because people invest some for dividends, some for growth. So I'm not so interested in that particularly. And then obviously you get your forecasts from the analysts, which again, analysts are not the best traders in the world. They don't tend to be. So forecast is probably just a little bit of an extra thing that you might look at later down the line. So you don't need all this stuff, but you can really go quite deeply in. Now, you don't have to pay for a subscription either. Yahoo Finance offers you pretty much everything that you need to know about any stock. So if you've got a stock in mind, like Dyson, for example, just go and have a look at Yahoo Finance and have a look through their numbers and see if you like them. And if you do, and you have a technical setup, then you've got a new way to trade and a new way to kind of get into some shares as well as trading currencies. But as I say, that's probably a conversation to really get in amongst another time. Maybe it's a separate course. I don't know. I use ShareScope, mate, and if you want, it's a subscription base, so you do have to pay for ShareScope. And I wouldn't do that if you are new to this, because if you go and learn it on Yahoo Finance for free, and if you get really good at this and really experienced, then it's worth paying for a subscription-based product. But until you do, you're just wasting money, because you're looking at something without any kind of clarity. So I wouldn't personally advise anybody to go into ShareScope until you understand. And also, ShareScope is very British-based. So I can get level 2. And if you don't know what level 2 is, then shout, and I can show you what level 2 is. But I can get level 2 on my British stocks, but I can't get level 2 on anything else, because it's a British-based platform. So you might want to find something which is more specific to which part of the world you're in. Yeah, that's just maybe a side note. So that's what that's all about anyway. And as I say, maybe that's a conversation and a subject for another day. Sure. No problem, Kumar. I will post the 2-minute brief link now. Right, the FTSE 100 has just given us a doji bar. Any of you guys, or a spinning top, if you like. Now, it doesn't matter what it's called, but let's see if we can analyze what happened in the first 15 minutes. just from looking at the first 15 minutes, first half an hour, just from what we've got with the bars here and the price action. So we opened up, moving down, and we popped up, and we refused the level up here, but not significantly. This is pretty basic selling, so nothing really significant going on there. Then we have this spinning top, and the spinning top is just telling us that something's really being weighted on. Have we got news released today, Jeff? I don't know, but this spinning top is
anything. We've got the scheduled MPC meeting.
Okay,
but I think that's a bit lame duck now. Everything's already happened, isn't it?
Quite possibly. But
to answer your question, I would leave it there, mate. I would leave it there. Sorry, mate.
Yeah, no problem, mate. No problem. Yeah, so just analysing this the chart right now, really the upside is probably just about going to be just about going to win the race, because if you think we are still in an upward trend, really, you know, we're holding a position, holding a support line, and the bars aren't suggesting that we sell. So we're just going to hold out. If you want to go long, but it wouldn't be my personal preference or suggestion at this stage. What I would be doing at this stage, when the bar says wait, and that's what this is. So what you're trying to do with each bar, you're basically going to give it a green, a red, an amber, or a red. And this is an amber bar. You know, this just says wait, hold fire, don't do anything at this stage. You know, if you start to learn about your bars, then you'll start to know, if we understand that this area down here is proven support, this bar is a green. That's a green light. Don't love the tail, but it's a green light. It decisively closed above the close of that bar. So there's a green light bouncing off the support line. When you understand this wasn't resistance initially, we didn't know that that was going to hold, but when that held the first time, and we look at it the second time along here, this bar here is a green light to sell. This bar, no. This bar, no, because it hadn't touched resistance. This bar still up, this bar up, this bar up. All of a sudden, you get your first signal that that there is a selling opportunity. So that's a green light to go to the downside. This one even better. Now, the reason this one's even better is because as it came down, it was holding, and it held, and it held, and then it tried to get back up again, and it was swept down. So you want to look at your bars and kind of grade them on a traffic light system, if you like. You know, it comes down, gets up to, this is support here, gets through support. So when it comes and tests and rejects support, this is a green light to sell. So it comes down on support. This is a green light to buy. And then we have an indecision here. Now, you know, obviously, if you have a bullish outlook on the FTSE, then really, you know, you should be buying when you see bars like this. Big problem is going to be this daily pivot, and I personally wouldn't want to trade into that, especially this close. So you know, on a regular moving chart and without any resistance points in the way, this would be a green light to go to the upside. Okay, let me post in the 2-minute brief, and shall I pass it over to you, Jeff? Should we go around the grounds a little bit?
Yeah, sure, mate. With the 2-minute brief, I think, did you see that link I posted to you?
No, sorry, buddy. Let me have a look.
I think that's the link the guys are after, which is the link to join into the 2-minute brief, not the Telegram channel. I think that's what the confusion is, perhaps.
Oh, anyway. Sorry, I haven't got anything that you've posted to me, mate, today.
Okay. Was that yesterday? Yeah, last night, I think. Probably,
last night. Okay, sorry.
Lunchtime, your time, or something like that.
These are the links they need. Okay.
Yeah.
One,
if you keep reading, you.
Oops, don't see to be working. They did 5 minutes ago. Which one am I looking at? The bottom one?
I don't know, mate.
Brilliant.
Try one.
Okay.
See if it works.
All right, I might leave that to Jeff. Or see if it works. Okay. All right, let me post in the bottom one. If this doesn't work.
So, PL, your question was, PL missed the entry, right, on pound US dollar. He may have been the most fortunate person in the room right now, but we don't know that, of course. This is a very bullish bar. There's no question about that. And the small retracement that we're getting at the moment, you know, could be anything. It could be reversal, who knows. But if you've missed the entry, nothing's changed, really. The opportunity for the breakout is still there, still exists. So, yeah, keep the order there. Keep it in place. I don't have a problem with that at all. I don't think anything's changed dramatically. And if you have missed the long entry and it goes short, then wow, happy days. How good can that be? Anyway, that's the answer to that question. A couple of other things that I wanted to show you guys. One is Euro US dollar. This has gone further than probably, well, myself included. I was going to say a lot of people anticipated. I thought it would only go to about there and then start to turn around. Looks like the monthly pivot is in its sights, and that's probably a decent place to look for a retracement or a short, if you like. It's really interesting to see what happens at the monthly pivot. So that's where I'll be concentrating on euro dollar for the next little bit, if and when it gets there. If it doesn't get there, that's probably not as good as if it does, because it gives us something to shoot off. It gives us a launch pad, if you like. So nothing to do here right now until euro dollar does hit the monthly pivot or reverses and gets back underneath these pivots. So I'm in pivot land at the moment. You know, I was expecting a fair bit of consolidation this week. Haven't really seen that, but on some charts we have seen that. Dollar yen is one, and I hate it when it leaks. It just goes leak without giving you a decent entry. So a decent entry for me would have been a nice retest of the daily pivot today. Then you can look to trade it short. The bias is definitely short. I told you guys yesterday about my three little Indians sitting here, and it looks as though they've half done the job already. Just no way in for me from a safe trading point of view, I'll put it that way. I'm not a speculator. I don't see a pattern and then go, okay, it's got to go, and place an order. I have to marry that with my strategy. And I didn't see any way to get into this. There was a way, but it happens when I sleep. And that kind of pisses you off, but it's the way the world is, you know. And there's the entry there, underneath this bar here. So very similar to what I've explained to you guys earlier. Remember, on the Kiwi, we've got a break of this trend line. We've come back underneath it, and then we've retested it with a big bullish bar. If you take that into this scenario, we've come back underneath the trend line. We've retested it with a big bullish bar. And that's exactly what I expect to happen when that occurs. Issue, as I said, that's like maybe 3 o'clock, 5 o'clock in the morning for me, or something like that. Goodness me, I'm only thinking about waking up at that stage. So that's, yeah, just missed it. And that's the way it goes. And no second opportunity yet. I say yet because there generally is a second chance to get back in to a move. If we're fortunate enough for that to happen, then we'll consider. Now, let me say this. When I see the three little Indians, the first thing that I see is the potential for the structure, the immediate structure that caused the three little Indians to break down, which means I expect the bottom of this range to break. But look what's underneath the bottom of this range. I think as soon as we hit there, I'll be looking to turn this around. It may even go long again. But this signal here is pretty much a short-term signal. And it tells me that we're going to break to the low side. It doesn't tell me how far. So really, I don't think I'll be wanting to trade through this level here. In fact, I think I'll be looking to play longs at that point. So back into the range, if you like, back into here, retest it and then I'll be looking to play it long again. We shall see. If it is a genuine turnaround, what will entice me to continue with the short is if this structure, or not structure, if the pivots break down, price gets below them and then retest them, then I'll get interested in playing the short right down to where the symmetry ends, and that will probably be there. What do I mean by symmetry? Okay, well, what I mean is what has happened on this side of the middle happens on this side of the middle. So in other words, I'll be looking for this to break down, retest, and then go to here and consolidate a bit, then go to here, and that's where I'd like to get out of the trade, because the likelihood of that happening on this side is absolutely there. So I wouldn't want to be trading beyond that point. In fact, I'd probably look for a long position at that point in time. So I'm very big on market structures or chart structures. And this is very much one of those times where I look ahead and see, I can see probably a month in advance almost. I know this is a 4-hour chart, maybe 2 weeks, 3 weeks in advance. That's what I'll be looking for on dollar yen. We'll see if we come back in a month or 6 weeks time and we've done exactly that and I've managed to trade it, happy days. But that's generally how that's my modus operandi. I like to see what is potentially there and try and trade it if I can.
So that's do you know what? I concur with that as well, mate. I love I think that's a really good explanation, and I think everybody should really get into that because the structure of your chart tells you 70% of what you need to know. You know, this because the structure of the chart, really, in my opinion, the structure of the chart is probably the most accurate reading of price that you can get. You know, people get, and this is the problem, everybody gets obsessed with bars. The bar should be the last thing that you do. You know, you're looking at top-down analysis, and the top really is your structure on a higher time frame. And then when you come down, you're sort of looking at structures on lower term time frames, and then the final trigger really is the bar. So yeah, I think everybody should get used to that. I don't know whether we should maybe almost do a whole show on structure, mate, one day.
Yeah, look, as you know, I draw my structures in and follow them until they break down. And this is the structure that I'm following right now. It's this descending channel. And absolutely, I expect this to come off here at some stage. And I think I said this yesterday. Best case scenario is if it breaks. And if it breaks, then I look for a false break. And the false break is a far better thing for me than just bouncing off the bottom and the top. Don't get me wrong, I like bounces off the bottom and the top, but oftentimes you don't get the opportunity to trade them back. And this was a case in point. You know, it just went so fast that it's very, very difficult to get in. But, you know, I think we're near to the top of that structure, and we've got a new structure inside that, which I just pointed out to you guys. So it's all about market structure for me.
Yes.
And you know, you go back to that monthly chart, just quickly, I'll do it. I'm expecting a bounce to go short here, right? Bring it down to the daily chart. Maybe we've started that, bring it down to the 4-hour chart. Then I'm looking for a bounce off the top. I've got my 3 little Indians, right? And I need a lower high here to get in. Answer your question, Chandru, no, I'm not in because I couldn't get in. I'm still waiting for that lower high to get me in. So yeah, look, I guess I'm not sure how long it took me to actually understand that, Ash. It was probably quite a few years before I understood that price actually does bounce off things.
Yes.
Whether they're horizontal levels or whether they're trade lines or trend lines or channels or rectangles or triangles, they just keep doing it.
Yeah.
And you know, the more you become aware of that, the far easier it is to actually have a directional bias, number one, and then, as you said, drill down into the charts. drill down into the time frames. And then if you understand what candles are telling you, gee, it becomes a whole lot easier, doesn't it? Rather than just
Absolutely
guessing.
does, mate. It absolutely does. And the thing is, it's almost trading in its most simple form, and everybody gets kind of caught up on overcomplicating things. But the overcomplication really comes from the indicators that people overlay on their strategy, because everybody looks at their indicators first and goes, oh, well, that's in place, I must have a short or I must have a long. But actually that should be the last thing that helps you get in. Your indicators really give you confidence that your analysis of structure has given you. So that's one lesson that everybody should really try and practice. Get your market structure in place. And when you've got your market structure in place with a clean chart, by the way, then go and open up a chart with your template and see if it agrees. And if it agrees, you're going to have a much higher probability trade at that particular point.
Yeah, Helen, Three Little Indians, it's actually my version of Three Little Indians. I think if you Google Three Little Indians, there's probably, I don't know, maybe 10, 15 different versions of it. But my version of it is when you've got a market structure that we're just talking about, and it breaks the market structure 3 times in a row. False. So in other words, we've got a market structure just started here. We've broken it. We've come back inside it. We've broken it again. We've come back inside it, and we've broken it again. And now we've come back inside it. You could really count those as the Three Little Indians. So we broke it here, back inside, broke it, back inside, broke it, back inside. So that's 3 times in a row. And I expect the next time that happens, exactly the same thing will take place, but even better, it will break the support level. Now, exactly what I said before, how far that breaks is questionable, but it will, in my humble opinion and in my experience, it will break this structure down. So it'll get down to these pivots, and what happens after that may well be another long back to the top of the market structure that is overriding everything, which is this descending channel, right, on a weekly chart and a monthly chart, because it really hasn't hit the top there yet. So that it's quite possible and feasible that it will go to there before it turns around. It's quite possible and feasible that it will go beyond there. Let me give you an example of that. Euro dollar weekly chart. This is exactly the same scenario where we bounced off the top, bottom, top, bottom, top, bottom, top, bottom, and then we smashed through, absolutely smashed through. But I think I was in a coaching session at the time, and I said to the guys in that coaching session, this will not last. Now, that said, had you got in there after that break, you would have got a couple of 100 pips out of the trade, and that's fine. But guess what? I got the rest when we came back inside, because I had a very, very strong leading indicator, I'll call it, and it's this channel. It's telling me, it's screaming at me that it doesn't want to get out of here. And look what happened when we hit the bottom of it. Bang, straight back in again. Now, this has gone a little bit further than I anticipated, and I still think it'll come back and have a look at this level. But I could well be proven wrong here now, because we're so far back into that. But that's exactly how I analyze what happens next. And when I say I love to see it break out, that's why I love to see it break out, because of what's just happened on euro dollar, because I know it will come back inside there at some stage. I've just got to be ready for it when it does. Happy days. These are the things that make me smile, because I know what's going to happen. It's just a matter of getting into the position. And that's why I draw these structures on my chart, because I know what's going to happen. I just don't know when. If I knew when, then, wow, I wouldn't have to do anything except wait for that to happen. And primarily, I guess that's what I do. That's pretty much my MO. So we've spoken about the pound, we've spoken about the euro, spoken about dollar yen. We've spoken about the Aussie. This is the same trade, as I said before. If you want to place this trade, I'll actually place it, because it is a setup. I'm going to spread my risk across the Aussie and the Kiwi, as I said before. Now, the big question here is where you put your stop, right? The entry, which, as I said before, is dangerous. Why? Because look at this. We've had a double bounce off the weekly pivot. What's telling me that if we come back there again, this time it will break? The only thing that's telling me that is, remember what I just showed you on euro dollar? Let me go there again. We got outside the structure. We came back inside the structure. Aussie dollar, we got outside the structure. We've come back inside the structure. This is telling me if this is tested again, this level here, the trend line, there's a strong chance it will bounce off it and follow the last momentum drive, which was down and back into the range. The interesting part, the range, I call the structure the range, right? The interesting part is we've broken through the bottom side of the structure and we've retested that as well. This really does look to me like we're headed this direction. That's how I see the chart. The one thing that spooks me a little bit is that we haven't tested the daily pivot. That's the only thing that spooks me just a little bit. So apart from the fact that we're trading on the support level, right? So I want to get my entry well below the support level. And if this was on a smaller time frame, I wouldn't take the trade. Why? Because I don't like to trade at around about the DS2 level. But because it's on a 4-hour chart, we've got plenty of time to adjust that. So into tomorrow, DS2 is down here somewhere maybe. Okay, so the order is going to be entry. I'm going to go 5 pips below the low of that bar. Actually, I'll go 5 pips below the weekly pivot. The weekly pivot is at 58.68. So I'll go 58.63 will be my entry. That doesn't make sense. 58. Really? Oh, yeah, okay. 58.63 will be my entry. I'm going to put my stop not above the bar, but above either this swing or the daily pivot, whichever I see is greater. Daily pivot. So the daily pivot's at 59.88. I'm going to go 7 pips above there. So I'm going to go to 59.95. That's going to be my stop. Because I want it out of the way of an untested daily pivot. If it tests the daily pivot, price that is, and then bounces, happy days. So it's a sell stop. There's my stop. There's my entry. Place the order, and it doesn't like it. Why? Sell stop. 59.63. The hell's wrong with it? Oh, it's 58.63. Sorry, got that wrong. I'm not having much luck here today. That's better. Okay, so you can see, well, you can't see the entry, but it's around about there-ish. And the stop loss is above the daily pivot, which is where I want it. Now, I will take profit at strategic levels here. That's probably one of them. We'll call it there. 58.33, I'll take my first profit. My second profit, about there, 57.20 will be my second profit. And then I'll just let the rest run. And if the rest actually takes off here, then we might be down here in the 54s, testing this low again. We'll see. I'm not 100% sure where we'll go there, but I do see the opportunity for this to go short again, at least to test this low, So we'll see. Dollar CAD, again, one of these ones I was trying to get short into and no opportunity there. As you can see, it just went flat out. We do have a potential reversal here, bearish engulfing bar, a couple of lower highs. We spoke about this yesterday as well, and I wanted price to get back and retest the daily pivot. Didn't do it. did put in a lower high. It's not significant. I like to see a nice swing there, and that's upset me a little bit. I really wanted to get into that before it got too far, but there's still opportunity. That opportunity will come as potentially a false break of that trade line for me. So I'd like to see price get up here, then get back underneath it, underneath the pivots, retest it, and then I can go short. Finally, dollar Swissy. Dollar Swissy we've been calling to come creeping back to this level here, 96.27 is what I wanted it to come back to. The reason is because I see an opportunity to then get back into a long. If you look at the bigger picture on this one, again, market structure is telling me that we've had a big bounce off the bottom of a range, but we haven't as yet had a higher low. And I anticipate that higher low may happen in here. And if I see that in here, then I dig down into the smaller time frames and I look to trade it long back to the top of the range. And the Kiwi we know about. If you weren't in early, there's an order underneath this bar here. Exactly the same trade as the Aussie, exactly the same trade. So if you are trading and you want to follow those trades, then I suggest you split your risk over Aussie and Kiwi versus the US dollar. It's exactly the same trade. Righto, that's where I'm at, guys.
Okay, mate.
Euro dollar, Chandra, what do you want to know about that, mate? I think I went through that one. Maybe you were talking about it, or that you comment before I went through that. So euro dollar, we all know about the euro. Do you want to know what I want to do with it now? Well, I still want to trade it short, and the best opportunity is going to be off here. One would expect, because it's a very strong level, the monthly pivot, and as you can see, it supported the market twice, then broke down, then acted as resistance. I would expect that will act as resistance again when we get there, and look to drive it back down at least into this range, but maybe to test the lows again down around 106.50. So that's the way I'm analysing euro dollar.
Yeah, the euro is really interesting, isn't it? And actually, haven't seen the euro continue its surge to the upside against the pound, which I think maybe is reflecting, how people feel right now about the UK economy. I think maybe people have just got a little bit more confidence than they did when the initial work on coronavirus was starting. I think that the government has probably started to get a little bit more control of the situation and how they're going to handle it. So a bit more confidence has come back in with the UK economy, and that's stabilized. But yeah, euro dollar is an interesting one, isn't it? I think there are maybe a few prices a bit higher, but I'd be with Jeff. I think that there's still an opportunity for a short, and while it surges to the upside, all it's doing is giving us a potentially a better price. So better to let it go and get up there, and when it's ready to turn around, then we'll see if we can jump on board with it.
Yeah, look, it may well go back to the top of the channel again. I'm certainly not saying it can't, but at every resistance level, I'll be looking to trade it short.
Yes, yeah, absolutely. I'd be the same with that, mate. The FTSE 100 is actually showing some pretty bullish price action right now for some upside. So we're same kind of thing. We're looking to see whether it can go and test the original highs at 5,700, currently at 5,530, and I suspect it may well get up there. So it's a bit of a strange day, actually, Jeff. It's it looks a bit rangy to me, and it looks like we might get caught in here until further news or data is released.
Yeah, look, that works for me, mate. If we range, I'm happy because I can then trade my structure, so I can trade it from top to bottom and bottom to top. So I'm not displeased with that. That'll work for me.
Yeah, sounds good, mate. Okay, well, I think we'll probably call it for the week. I don't think unless anybody's got any other any other questions, or unless you got anything else that you wanted to add, mate.
No, mate. I think I'm good. I think everybody knows where I'm at in terms of which pairs I'm happy to trade and in what direction. So just a matter of hanging in there until they give us the opportunity, I guess. Would have shorted on the top of bounce dollar yen. Top of bounce. Let me have a look at Dolly N again. Would have shorted on the top of bounce. What chart, mate? You mean
What
just
time frame are you
see the
looking
top?
at? Yeah.
See the top and short? Wish I could pick that. I don't see any way I could have got into that, mate. Unfortunately, the time of day that it happened, this one here, I'm sound asleep. That's the only way I could have got into this. Yeah, that's the entry right there. But that's like what? 2000. So that's what, 8 o'clock, no, 5 o'clock in the morning. I can't equate that. 2000. What's the time now? The time now is 1200. So that's 8 hours from now. So that's 8 hours from now would be 4 a.m. I ain't awake at 4 a.m. Sorry.
Yeah, I mean, it's not the worst. It wouldn't be the worst trade in the world. Well, obviously, it's worked out pretty well. But yeah, if you get a rejection 4 times, and that is showing a pretty strong level, and if that meets your strategy, then that's absolutely fine. Kumar, I've posted the links. Can you not see them up there, buddy? And if nobody else can see them, then there's a bit of a problem with my posting, I think. I posted the links right under your name. If you scroll up a little bit. Just when you said thanks, Ash, then there should be 2 posts from me. Can you see those in there, Jeff?
No.
Oh, so I've been posting every day and it's not coming up. So why is that?
I saw a post of yours earlier. It said Dyson. Yeah.
Oh, you did see that. Okay. So is there
a
problem with posting links? Is there possibly a problem with posting links on YouTube? Do they block them?
Could be. Yeah, I dare say that's quite true.
Right. Then in that case, okay, if they're not there, then in that case, we're going to have to find a different way around. Right. No problem. Okay, so that's where. Well, at least we got to the bottom of it because I've been wondering. You know, I've had emails from and texts from Charlene saying why aren't you posting effectively? And I have been posting.
Now we know why.
Yeah, now I know why. So yeah, it must be a block on the link. So how do we get around this, Jeff? I guess use Telegram.
Yeah, we'll have to form a group somewhere in Telegram or in no, Telegram would have to be. But how we get, yeah, yeah, it's interesting because who's got access to the Telegram group? Look, we're going to have to run this through admin, guys, I think.
Yeah, this is beyond mine and Jeff's pay grade. We're a bit dumb when it comes down to this stuff. This is where Jeff and I are like. Who would we be like? I don't know, Lauren and Harding.
Costello.
Oh yeah. We need some brains. James and Charlene are the brains of this operation. So we need those guys to probably help us out with that. Yeah, sorry, Kumar. I didn't realise. I've been posting there every day for the last, I don't know how long we've been doing this show, and nobody's been seeing them, and it makes sense. I think YouTube has probably blocked it. So yes, we do. We need a little Telegram group of our own that we can all maybe pop into and go there maybe. Draw on the screen. Oh, look at Freddie. Look at that, man. I mean, that. Tell you what. Now, the only thing is, you're right. I mean, I love your thinking there. Well, that is thinking outside the box. The only problem is that you can't click on that link, and the link is pretty wordy. So you'd be able to copy it all down, but it'd take you a long time, I think. But that's a great idea. How do you like that? You have got the trader's mentality. That's thinking left field. Well,
link, yeah, might have to go through. What do they call those? Tiny link or something? Tiny URL.
see how tech savvy we are. They call that thing the tiny. Yeah, Yeah. Yeah, this is really. But Jeff and I know how to look at charts and look at currencies and stocks, but that's pretty much where we based.
As long as someone can start my computer, I'm okay.
Yeah, well, we've based all our energy in that area, haven't we, Jeff? And when it comes down, somebody asks us to do something outside that, and we get a little bit confounded. So
Go on. Got nothing.
So sorry about that. Tiny tiny URL. Is that what you mean, Jeff? Tiny URL.
Yeah, that's the one.
Yeah, there you go. Sounds like a euphemism to me. Anyway, we better push off, and we will talk to admin about this and get on with that instead. And they will sort it out for us, and we'll have an answer for you by next week.
I don't think we can do that, can we?
I mean, I can put it on the screen, yeah, but you will literally.
But you guys can't do anything with it except.
No, you can't click on it.
Take a screenshot and then type it out, I suppose.
Yeah, you could do that way, but that sounds pretty laborious to me. I mean, we'll find a quick way. If we can't do the quick way, then that is the answer, and we'll come back to doing it things like that. So
I'll give you a. Last time I'll do this, right? Kiwi yen short is my 2-minute brief today. I'm not going to give you the levels. You're going to have to subscribe, guys. Simple as that. Because people in there, I can't give away the information. Sorry, but Kiwi yen short.
I hope you guys understand that. What we everything that we do on this show is completely free for you guys. But there are sort of just a few extras that we do charge for, because that's just part of the business structure of Actions to Wealth. So hopefully you guys understand that not everything is free. This is free, and hopefully you guys are getting a lot out of it. But the 2-minute free brief is just a bit extra that we're sort of overlaying just to help some people out. I suppose it's a bit of extra coaching somewhere along the line, isn't it?
Yeah.
So yes, Kumo, you can't subscribe just yet. You're absolutely right. So really, up until this point, then Jeff will have to keep those levels to himself. We do have a subscription, however, so or a few people have managed to get on there somehow. So those guys would be, I think, a little bit angry, if a bit upset if we were just to kind of give levels here now, because
we will have a way from Monday. We will have a way.
Yes, we will. We will. Leave it with us. Leave it with us. Okay, well, let's push off. John, get your music over to Shirlene or James, and they'll pass it on to us, or Willie. Actually, might be better, because I think Willie's running the music side on this. And we will play it on the show, live on the show. And if you're happy with us using it, maybe it'll become a bit of a regular feature. John's 5 minutes. We'll have something like that. Yeah, only if you're comfortable, mate. That's if we can do something for you, that'd be amazing, and it would be great for Jeff and I as well, because we would like a bit of music on the show, wouldn't we, Jeff?
Absolutely, yes.
And in Bali, when we get to Bali next year, never know, you might hear Jeff singing it around the bar.
Oh my goodness me!
Yeah,
under pressure again.
Yeah. All right, guys, we will push off. Have a great rest of the week. Have a great weekend. We'll be back Monday, same trade time, same trade channel at 5 to 8.
No, which is now different. Sorry, I'll have to cut it off again.
5 to 8 UK though. 5 to 8 UK right. Still, so yeah.
That will still be the same but if you're tuning in Australia, that will be at 5 to 6 p.m. If you're in if you're in Singapore, Hong Kong, Malaysia, that will be at 5 to 3 in the afternoon. So
it's not snappy though, Jeff. I've got a bit of a problem with this.
Yeah, but on Monday I'll have a new one for you.
Okay. All right, guys.
But what time in the UK?
Oh, well, 5 to 8.
That's a date. Don't be late. Have a good weekend, guys. Bye for now.